CNBC TV 18, celebrating 15 years of leadership.
We've been the first, we'll be the first. We've done the new and more we must. We've given hope, we've more to give. We've shown lives, there's more to live. We will be the one, we will pass the sun. We will lead the way we have led. Triumphs behind, triumphs ahead. We will set our sights, we will do it right. We will lead the way we have led. Triumphs behind, triumphs ahead. We will lead the way we have led. Triumphs behind, triumphs ahead. We will lead the way.
15 years gone and still going strong. CNBC TV 18 has touched another big milestone today. 15 years of undisputed leadership, from a humble beginnings in a makeshift basement studio to being a powerhouse in the broadcast industry. We've indeed come a long way, and today we want to thank all our viewers for being a part of this incredible journey. Good evening. Thanks very much for joining us on this special edition of India Business Hour. I'm Shireen Bhan, and here's a look at the headlines that we're tracking tonight. Our top story: the $4 billion deal between Sun Pharma and Ranbaxy gets the competition watchdog's conditional nod. The merged entity will have to sell 7 brands worth 137 crore rupees for the deal to fructify. The insurance bill gets a step closer to reality. Sources say the Select Committee approves a draft report that recommends a composite FDI cap of 49%. That's another exclusive. Selling pressure grips Dalal Street. The Sensex tanks over 300 points. The Nifty sheds 100 points. Rupee weakens against the dollar, nears the 62 mark. 4 founders of Infosys, including the families of Narayana, Murthy and Nandan, Nilekani, sell some of their shares in the company. Murthy says the move will fund his philanthropic activities. Infosys tanks 5% in trade. After a cab driver is accused of rape, the Delhi government bans Uber cab services in the state. Uber CEO blames the government's licensing program. Reports suggest the rape accused is a serial offender. India's current account deficit widens marginally in the second quarter. A surge in gold imports and slower growth in exports takes the deficit to 2.1% of GDP. Aviation regulator sends out a stern warning to SpiceJet, asks the airline to stop advance bookings beyond a month immediately or risk losing its flying permit. Crude oil continues to tumble. Prices hit their lowest level in 5 years after Morgan Stanley cuts its forecast. Global equity markets are also under pressure. But straight to the top story this evening. We told you so, and it is now official. The competition watchdog has cleared the $4 billion deal between Sun Pharma and Ranbaxy, but it's done that with riders. The CCI has asked both companies to sell 7 brands within 6 months for this deal to go through. The chairman of the Competition Commission of India, Ashok Chawla, spoke exclusively to CNBC TV 18. He said that these 7 brands impact fair competition in the market, and they must be divested for the merger to go through. Before we come to the analysis, let's listen in to the CCI chief.
Identified 7 brands, molecules, which we said cannot be allowed to go through even though the merger can be approved, but those have to be, the assets relating to those have to be divested before the 2 companies can effect the merger. Well, this is in that sense a conditional approval that until these are sold, the divestment cannot, the merger cannot be effected.
Well, that's the CCI chief, Ashok Chawla, speaking with us earlier. Archana joins us now with more details on the story. Archana, we understand that these 7 brands are worth about 137 crore rupees. So in that sense, it is unlikely to be a material impact for the merged entity. How difficult will it be for Sun and Ranbaxy to divest these brands?
Well, actually, it's a very, very positive clearance that Sun and Ranbaxy have got, considering there were 49 drugs that were under the scanner. Like Mr. Chawla told us, only 7 of these brands have been chosen to be divested of the 49 that were being studied. And 137 is the combined market size for all the 14 brands, combining both Sun and Ranbaxy. But actually what has to be divested is just less than 50 crore rupees, and obviously is not a material impact on the merger or on any of the or both the companies that we're talking about. 7 products to be divested, 6 from Ranbaxy's portfolio, 1 from Sun. The biggest product that has to be divested is Eligard, which is a hormone drug, 30 crore rupee brand size that Ranbaxy has to divest. But considering they only have a distribution rights for that drug, there is a condition that in case they are unable to divest it, then Sun's corresponding brand in that category would be divested. The one brand that Sun has to divest is just a 3 crore rupees brand called Tamlet. So in all, impact-wise, very negligible on the companies. Both the companies in their statement have also said that it is less than 1% of the combined and the merged entities' revenues that they have to divest right now. What needs to be seen is what sort of valuations can they get when they hit the market with these products and call for bids. Market experts say, considering Sun and Ranbaxy both have a good stature in the market, they can command somewhere like 3 to 4 times the brand size as valuations, and could be a easy. It should not be a very difficult ride as far as the divestment is concerned. So net quite positive. Riders are fairly simple that have come in. 6-month window, external auditor who would be overseeing the entire process, and not that much of a material impact. And obviously, with all of this, the nod that has come in.
All right, Archana, appreciate you joining us. So Sun and Ranbaxy, 2 stocks to watch out for in trade tomorrow. As Archana was saying, the markets should like what the CCI has had to say. The other big story this evening, the government's plans to hike FDI in the insurance sector to 49% seems to be a step closer to reality. Sources say the select committee has adopted a draft report. Ritu joins us now with the details. Ritu, we understand that parties like the Trinamool oppose the move, but how soon can we expect this bill to be passed? Is a winter session passage a done deal?
We understand that the insurance amendment bill will be tabled once the report is put before the Rajya Sabha on either 11th or 12th of this month. It could even happen on 10th. What happened today was the select committee draft report was adopted by the members. 2 key recommendations according to our sources. Firstly, 49% composite FDI in insurance. Composite FDI means all foreign investment instruments, be it FDI, be it FPI, be it NRI, all are capped at 49%. The other important recommendation is that the definition of ownership and control is embedded in the Insurance Act, an amendment bill, which means that executive orders will not be able to change the definition of ownership and control as far as insurance companies are concerned. As of now, that definition also exists in the FDI policy as well as the Companies Act. But as far as the political floor management by the NDA is concerned regarding this crucial bill, there will be 2 dissent notes tomorrow for sure. One is TMC, other is left parties. They have been consistent in opposition as far as this legislation is concerned. But we also learned that Samajwadi Party and even the JDU will also put in their respective dissent notes as far as this select panel report is concerned. With that,
all right, Ritu, thanks very much for joining us. Now, the Finance Minister is also gung-ho about attracting foreign investment to the sector. Today, he spoke at an event organised by the India and UK Financial Partnership. The CEO of Standard Life, Jerry Jimstone, and Uday Kotak of Kotak Mahindra Bank were in the audience. Jaitley said the insurance market will expand once the bill to hike FDI is passed by Parliament. He's also called on the UK to invest in developing a corporate bond market in India to help further the cause of financial inclusion. Let's get down to macroeconomy, and there is news coming in on the current account deficit. It has widened marginally in the second quarter to 2.1% of GDP, and that compares to 1.7% in the previous quarter. Lata joins us now with an analysis of the numbers. Lata, it looks like the exports have not been able to offset the rise in gold imports.
Well, the current account deficit numbers are not a surprise at all. That they would be 3 billion higher was expected because the trade deficit numbers for July, August, September, which we knew by mid-October itself, indicated that the trade deficit is about 4 billion. It stands at 38 billion, 4 billion more than the 34 billion that we notched up as trade deficit in the first quarter. And this increase, as you said, has come largely on the back of higher gold imports, also slower growth in exports. The other data released by the current account deficit today by the Reserve Bank had no surprises at all. Software's earnings is the big counter to trade deficit. That came in at 16.9 billion, pretty much like the 17 billion in the first quarter. Net outflow on account of payments which Indians make, as dividend or interest payments to foreigners, that has come in at 6.9 billion. Again, it was 6.3 billion a year ago. It was 6.7 billion in the first quarter. It's been between 6.5 and 6.9 billion. And private transfers, which is another big inflow item, that is Indians living abroad and remitting money, has been largely stable around that $17.5 billion, which is what came in the current quarter as well. That kind of ranges between 16.5 and 17.5 billion. So no surprises there, which is why the current account deficit data is pretty much on expected lines at $10 billion. While on the current account we are a deficit, on the capital account we are usually a surplus, and that's because FDI has come in at 8 billion, again unchanged from the previous quarter at 8.1 billion. FII inflows were at 9.7 billion, slightly lower than the 12 billion in the Modi election quarter, but really nothing to complain about, 9.7 billion, as well as loans taken by Indian companies stood at 2.2 billion compared to 1.8 billion. Net, there was an inflow of about 18 billion. You deduct from the deficit of 10 billion in the current account, you would have got an 8 billion BOP surplus, but because of dollar-rupee adjustments and currency adjustments, we get a BOP surplus in the second quarter of 6.9 billion. One way to look at it would be whether the 2.1% GDP current account deficit is a source of worry. Actually, the Reserve Bank's long-range comfort zone on current account deficit has been between 2 and 2.5%. So 2.1%, it's not a worry at all. Chances are current account deficit could even fall in the current and the next quarter because of lower gold prices and lower oil prices predominantly. This could be offset by slower exports, but we will have to wait and see. In any case, this is a non-event number since it's largely factored in.
Largely factored in. Leva, thanks very much. That was the current account number. Now to the day's trading market action. Markets coming under a fair bit of selling pressure today. Both blue chips as well as this mid-cap saw some deep cuts. The Sensex slipped over 300 points. Losses accentuated post-lunch. The index, though, is still holding above 28,000. The Nifty was down 100 points, slipping below the 8,500 mark. Mid-caps were not spared either. Mid-cap index lost about 1%. But it is a milestone day for us here at CNBC TV 18 as we celebrated our 15th birthday. And in true CNBC TV 18 fashion, we made it a trading day to remember.
CNBC TV 18, celebrating 15 years of leadership.
You're watching Opening Bell here on CNBC TV 18.
We don't do things in halves. So to mark our 15th birthday,
15 years of CNBC
we
TV.
made the NSE's Opening Bell make the trip to our newsroom. This became the first time the bell has travelled to the exchange. It wasn't just CNBC TV 18 veterans who took their turn at the bell. NSE's Managing Director, Chitra Ramakrishnan, and market veterans like Ramesh Damani, Atul Suri, and Sanjoy Bhattacharya joined in with aplomb.
I think we've all been fortunate to be part of a period in markets where there has been tremendous sort of changes, and some of us have had a chance to be part of those changes. And as electronic media, I think you all have done a wonderful job of bringing a lot of transparency and information to the market. So a very, very warm congratulations to all of you.
India is a land of great opportunities, and the stock market and CNBC have reflected it over the last 15 years.
It's been a long journey, right from my days in broking when I used to come to the studio at Rocondo House to hear the transition, the anchors. It's been great. It's been a fantastic last 15 years in the markets with CNBC. See you 15 years hence.
Don't you scare me like this.
Minus 0.6 in December and sorry.
The last 15 years holds a host of memories. Moments that just cannot be captured on film, but are vivid in our memories.
Incredible journey, incredible time to be in India, and the most incredible people that I've worked with and I've associated with, Ramesh, Chitra, all of you. I mean, it's been an incredible journey, Shireen. Thank you. Thank you guys so much.
I walked into CNBC TV 18 on the 7th of December 15 years ago, and there was a party on then, and there is a party on today as well.
Well, it's incredible. We've survived so much. We've covered so much. Markets, floods, terrorist attacks. I mean, you know, you throw it at us and we've done it all. And it's incredible for the entire team here today.
From done. As the markets entered their last lap of the day, we had another final moment. The BSE's gong made its grand entrance into our newsroom, just in time to mark the close of the trading day.
So all the best to CNBC TV 18 and many happy returns of the day.
Thank you.
Happy birthday to you, and I wish that you have more and more years to go and do the good service to investor and corporate.
But the day's celebrations didn't end there. After all, what's a birthday celebration without a cake and a song? Happy birthday to you.
Well, 15 years and counting. Thank you to all our viewers once again for staying with CNBC TV 18 through the years. But now on to the action in the currency markets, where the rupee weakened today after robust monthly U.S. employment data on Friday threw up fresh worries that there could be an earlier than expected hike in the U.S. interest rates, which could dent foreign flows to emerging markets. 61.83 is where we saw the dollar rupee. The upbeat economic data from the U.S. has done little to support crude oil prices, though, declining for the fifth day running as worries about weak demand continue to spark a sell-off in the commodity. Brent oil fell as much as 3.3% to $66.77 a barrel in early trade, the lowest since October of 2009. It's since settled around $67, $68 to a barrel. With this, crude oil prices have now fallen 39% this year. WTI NYMEX is trading around 2% lower at $64.38 a barrel. A quick check on the global markets. European markets have been under pressure through the day today, and all major indices are in fact in the red. The FTSE, the CAC are down close to 1%, and the energy stocks are leading the decline. Across the Atlantic, shares on Wall Street are also struggling to find traction. The Dow and the S&P are marginally in the red, but tech stocks are on the move, and the Nasdaq is clocking gains as we speak. It's up by about 12 points. Staying with global news, the U.S. Fed is nervous and unsure of what's going on. That's the word coming in from Nobel Prize-winning economist Ken Rogoff. Speaking exclusively to CNBC TV 18, Rogoff said the central bank will hike interest rates only if inflation shows a sustained pickup.
I think it's clear the economy is doing well. It's clear that labor markets are improving. And if this were a normal recession, the Fed would already have raised interest rates and be looking to raise them further. They're very nervous that they're not quite sure what's going on. They don't know why global interest rates are so low. They don't know why inflation's quite as low as it is. They know that their models are off. And I think it makes them more cautious. I don't think they'll move until there's pretty firm evidence that inflation's not just rising, but rising on a sustained basis. I bet that does happen sometime in the second half of 2015.
Well, that's Ken Rogoff. It's not been a great day for people who are invested in IT bellwether Infosys. The stock dropped about 5% after 4 founding members sold up to 36 million shares in multiple block deals. CNBC TV 18's Kritika Saxena reports that while the founders raked in over $1 billion, that's 11,600 crore rupees in investor wealth, has been wiped out.
NR Narayana, Murthy, SD Shibulal, Nandan, Nilekani and K. Dinesh. These 4 founders of IT giant Infosys and their families have cashed in on the recent appreciation in the value of the stock. They've together raised over $1 billion by selling, in all, about 36 million shares. That's a 2.8% stake in the company through multiple block deals. Now, the selling founders say the money will go to a good cause, but the street was not amused. That's because the offer price came to 1,988 rupees per share, a 4% discount to Friday's closing price of 2,069 rupees a share. This sharp discount has raised quite a few eyebrows on Dalal Street, but Deutsche Bank, the sole book runner for the deals, says the discount was a fair valuation and that 80% of the issue was lapped up by foreign investors.
I think the deal was, I think, very well done. It was done over the weekend, given the fact that Infosys trades both local and ADR, so we had very limited time. We launched it early morning and closed it before market today. Very good response from both domestic and international investors. Even though domestic investors did not have much time, they came in substantially. So broadly speaking, about 80% foreign and 20% domestic demand.
How many times was the book oversubscribed?
Again, I can't comment on it, but
a couple of times?
Reasonably oversubscribed.
So if it was reasonably oversubscribed, why did you feel compelled to sell it at a fairly big discount to market price?
4% for such a large trade is not a big discount.
That defense has done little to soothe investor sentiment, prompting Narayana Murthy to issue a statement saying, and I quote, "Our family has sold a minor part of our stake to continue various activities, including our efforts to encourage entrepreneurship and our personal philanthropic efforts. These are activities that I expect to be busy with during the next phase of my life. Even after this sale, our family continues to be the largest shareholder among retail shareholders." End quote. The other three founders have also released similar statements, saying the sale is not intended to cast doubts over the company's future growth potential. But as far as investors on the street are concerned, the move has meant 11,600 crore rupees in wealth being wiped out in a single day. And that may not be that easy to digest. In Mumbai, Kritika Saxena.
Well, we'll have to see how the street reacts tomorrow. Now, taxi service Uber has been banned in Delhi. The Delhi government has banned the service with immediate effect. All operations by Uber in the city have been stopped following the alleged rape incident. Meanwhile, the accused cab driver Shiv Kumar Yadav has been produced in court.
Shiv Kumar Yadav being brought out of the Delhi court after he was sent to 3 days in police custody. Bystanders tried to attack the 32-year-old Uber taxi driver who was being accused of raping a young woman. Police sought his custody after he refused to undergo test identification parade. CNN-IBN has access to residence cum character verification certificate ostensibly issued by the Delhi police to Yadav in 2014. It fails to mention his acquittal in the 2011 rape case, but the police claims the certificate was forged.
Antecedent verification certificate, which supposedly is signed by one of our additional deputy commissioner on a particular date. We have checked on that particular date, that officer was not posted, and no such certificate on that particular date has been issued in respect of this person. So apparently, prima facie, this certificate is fake. A case is being registered so that the case can be investigated.
Meanwhile, a senior executive of Uber Cabs in Delhi was interrogated by the police. When CNN-IBN tried to ask them if there was negligence on their part, Uber executives refused to comment.
Gagan, just tell us, what is it that you can tell us about operations of Uber in India?
So right now I cannot comment on anything, please.
What have the police officials asked you so far?
No comments.
Do you think it has dented the image of Uber?
No comments.
Police are trying to ascertain if the cab aggregator can be booked for criminal negligence. But after claiming on Sunday that Uber exclusively partners with registered for-hire drivers who have undergone commercial licensing processes, hold government-issued IDs, state-issued permits and carry full commercial insurance, Uber has now done a U-turn and blamed the government for lack of clear laws. It now says, and I quote, "We will work with the government to establish clear background checks currently absent in their commercial transport licensing programs."
After interrogating the Uber cab executives for over 7 hours, Delhi police is closely looking into the criminality of the neglect which is being shown by the Uber cab drivers and the Uber cab executives in Delhi. If they are found to be negligent, Delhi police is going to lodge an FIR against them.
ऑपरेट कर रहे थे uber.com के थ्रू, जो कि इसमें सहभागी हैं, क्योंकि एक ऑल इंडिया टूरिस्ट परमिट वाली व्हीकल को as a local taxi नहीं यूज किया जा सकता.
As the opposition took to the streets, the centre is promising prompt action.
जो भी आवश्यक कार्रवाई है, माने वुमेन सिक्योरिटी को इंश्योर करने के लिए वो सब हमारी गवर्नमेंट कर रही है. हम लोग पूरा प्रिकॉशन लेंगे कि वुमेन सिक्योरिटी को इंश्योर करने के लिए और क्या-क्या हमको कदम उठाने चाहिए.
With Shubhajit Sengupta in New Delhi, Achut Panekat.
Well, let's now talk about SpiceJet. The aviation regulator has issued a stern warning to the cash-strapped airline. Last week, the regulator had asked the airline to stop advance bookings beyond a month. The DGCA today said that SpiceJet has not complied with that order, and if it continues to do so, the airline will risk losing its flying permit. Sindhu Bhattacharya joins us now with more details. Sindhu, more turbulence for SpiceJet.
So SpiceJet is in a fresh spot of trouble because it continues to offer advance bookings beyond a month, and the regulator DGCA had specifically barred it from doing so. SpiceJet says it gets a third of its revenues from advance bookings, and it is not in the airline's interest to stop it. But the DGCA has now written to the airline asking it to stop these bookings, or else it will issue a show cause notice by tomorrow. A show cause notice immediately may not lead to any adverse impact, but in the long run could actually get SpiceJet to cancel its permit, its operating permit. Separately, the Airports Authority of India is putting SpiceJet on cash and carry from the 10th unless the airline pays up its 200 crore rupee dues. This could mean that SpiceJet gets squeezed from both sides, from the DGCA side and from the Airports Authority side. The Ministry of Civil Aviation wants to help the airline. There's some talk of the ministry trying to get the airline a buyer, but will that happen? We still don't know. The airline urgently needs rupees 1,500 crore to sustain its operations. Unless the Marans, who are the promoters, or a fresh buyer puts in that money, the airline will continue to be in trouble.
All right, Sindhu, appreciate you joining us. So fresh trouble there for SpiceJet. The regulator has said that they cannot do advance bookings for more than a month, and non-compliance of that order could result in the regulator scrapping the air operator's permit. Now, for the last 15 years, we've been reporting from the markets, but today the market came to the CNBC TV 18 newsroom. As we slip into a break, we leave you with images of market closing, us with the BSE gong in our newsroom.
Now the BSE, you have a huge technology background. Where will technology take transaction costs?
CNBC TV 18, celebrating 15 years of leadership.